All right, how about now? How about now? All right, cool. Yeah, my computer restarts, so I guess something got reset there, but all good. All right, so we'll get to it. We're running a couple of minutes behind, so all good. All right, so those new to us, going to go to our pre-market prep. What is our pre-market prep? That has to do with really analyzing the SPX options complex. The reason for that is because the SPX options market complex is massive today, right? Just the growth of retail and institutional trading within that, so it gives us a good sense on what how the broad market is positioned, and then we'll drill down into 0DT to kind of get tactical on the short-term trading, specifically for today. And the SPX overall environment can help inform our swing trading more from multi-day to multi-week time frame. And just hitting on that real quick, let me. So if you guys are not, is this like your first time viewing it or whatever, GameEdge.us, go to our blog. We have different articles. There's going to be different terms I talk about today. The point of this webinar is not to be an educational point of view. It's to present you guys with what the game plan is today. So I'm not going to explain every single thing to you. We have various articles, like here's our pre-market prep routine, market trend model we're going to hit on, intraday volume analysis we're going to hit on, transition zones we're going to hit on. So we have all this prepared material for you guys so you can give that a review. Second thing is, in the coming days, we're going to be launching a new free course. Everything we do here is free. It's called the GameEdge Fast Pass. It's going to be kind of our new one-stop shop for kind of all the authoritative literature, our entire suite of tools, how to use those, entire trading methodology. Really don't hold anything back. So that's going to be hosted in Notion. You can see that. That's what I'm showing here. We're going to have quick start guides if you're an intraday trader, if you're a swing trader, assuming you don't want to read all the articles in this course. Recommend that you obviously do. We wouldn't include it if it's not important. But yeah, just keep an eye out for that. If you're on the email list, you'll get an email about that. If you're not, then you're going to have to sign up for it. So with that, getting the SPX, again, we separate it between SPXA and SPXP. Reason for that is because there's different players within each of those. So, if you're combining SPX, SPXA with SPY, probably not the best way to go about using it, because those instruments are used by different folks for different reasons. So SPXA, we call that the cruise ship, 14 million contracts here. This is kind of your institutional, slower moving money. This is where your monthly, your quarterly expirations are. So quickly rifling through this, you guys can read the detail in the Discord, but call dominated environment. So that's good to see. Net good to see. The true zeros, these are trending higher. Again, a good sign to see. It means that the market is generally more bullish. Calls are generally more dominant than puts here. Looking at the GEX ratio, so have seen a little bit of a pullback this week. Nothing concerning right now. Like, pullbacks are healthy. We're still well above 1, which above 1 indicates that call gamma is greater relative to put gamma. How keep in mind the rate of change is important. So we're seeing a pullback here, which is not concerning given we were at a little bit of elevated levels here. However, we don't want to see kind of a waterfall move lower. We eventually want to see a resumption higher there. So not necessarily like anything actionable of what I just told you, just simply kind of this is where we are in the current structure there. Looking at delta balance, again, the neat thing about options market is they are inherently forward looking because the expirations are out in time, so we can understand how folks are positioned out in time to understand what their future expectations are, right? And so all this to say, so we're looking at above and below spot price. We separate those, and so the net of those are presented with this blue line. So that's pinned at 1. This is an oscillator between -1 and 1. So being at 1 is max bullish. So that's good to see. That's just kind of the TLDR of that. This is specifically the July expiration. Again, net bullish there, as in call dominated. Good to see. One thing I skipped is the market trend model. So in addition to looking at the SPX complex, we look at the market trend model, which is built off the tick index. That's just kind of a real-time buying and selling index. If you guys are not familiar with that, you can go to Investopedia, see what that's about, or we have that article where we explain it as well. So this gives us both a multi-time frame view, meaning we have the intraday cumulative tick, which is this bolded white line, which kind of everything else is built off of. We create a time series out of that so we can just understand what the multi-day trends are. So right now, very flat, short-term moving average ribbon, very flat as well. Longer-term moving average ribbon is trending higher. So this is kind of a consolidation pullback within the context of a longer-term uptrend is the way that we look at this right now. Filter tick, this cyan line, that registers when there's significant buying or selling coming into the market. So yesterday, very flat day. This neon or green line, that's the RSP. So that's the equal weight S&P price chart. We can see very choppy price action yesterday from really no large buying or selling, yawner of a day, to be honest with you. So from a bullish point of view, we want to see this resume higher, the cumulative tick that is resume higher, have this kind of signature look right here, get that moving. That's kind of a 3 to 5 day is how that trends. So, if we get kind of an intraday signal of that trending higher, it could persist for 3 to 5 days, maybe, but it always starts right with the current day moving higher. So as we were saying earlier, kind of the context of a consolidation pullback within a long-term uptrend, generally a good time to buy, but we're going to wait for confirmation to see that this does move higher. And then again, this is just a great thing to be looking at on an intraday basis if you are just trading intraday, to understand kind of what the trend of the day is. Last week had a nice uptrend, couple days, and then what's today, Wednesday? So Monday, a bit of a pullback. Tuesday, consolidation. We all saw that in here, and then in the context of our intraday volume analysis, very powerful. In our nightly videos that we send out on to the email, they're on YouTube. We really hone in on the 0DT action for the day, going from how we got our pre-market levels to how we used our intraday tools, that being intraday volume analysis and this market trend model. So if you're not familiar with that, give that a read. Going back to our prep. Okay, moving on to SPXP full complex. By full complex, I mean all expirations are turned on. SPXP, what is that? How is that different than SPXA? So in short, these are going to be more of your short-term traders, short-term speculators. Why? Because this is where your daily, your weekly expirations are. This is where your 0DT expirations are. So the money is just going to transact more quickly. And so the good thing about separating SPXP from SPXA is any changes to structure generally will flow through quicker in the SPXP. And then if they're going to stick for kind of a longer-term time frame, then they're going to shift in the SPXA complex. So that's the reason that we separate these, is because fundamentally the agents that are acting within SPXP versus SPXA are different. So all that to say, right, call dominated above the spot price. We see that to the net delta column. Transition zone 61.95, 62.20. So all that to say, within the transition zone, we're not interested in operating because that is generally choppier conditions. But above 62.20, that's going to be more constructive from a bullish point of view. And then 61.95, 6200 starts to get a bit more dicey. We could see deterioration of structure, all that good stuff. So we want to see, if we lose 62.20, we want to see the market trend model starting to crumble as well. But we are set to open. Let me look real quick. We're set to open at 62.45. Had a nice ramp in the overnight session. So yeah, we're going to be, well above the top of transition. So good to see. Yeah, we go a bit into more detail. That's why we do SPXE versus SPXA in the Discord. Looking at the true zeros, trending higher. Good to see there. GEX ratio. Again, we've had a bit more of a move lower in the SPXP GEX ratio. We're still above 1, which is good to see, but we've fallen from 3 down to 1, which 3 was just very extreme, right? That's so yeah, all that to say, seen a bit of a deterioration in this. However, just understand where we are in the pre-market, understand what SPXP structure is like. Still are constructive, especially if the market trend model moves higher as well. So again, this is not actionable per se, but this is really just saying, hey, if we keep collapsing lower, then that is going to be concerning in the long term, because we often do see divergences. In kind of the first divergences we see are in the GEX ratio, where we see the GEX ratio moving lower, which is indicating puts are coming into the structure and or calls are going away from the structure, while price is still kind of near all-time highs. So we do want to see this start to correct itself in short order. Delta balance, same thing, looking here, pinned at 1, so that is good to see. Bit of a collapse yesterday, but it looks like it's going to be repairing itself out into the week. Finally, getting into SPX 0 DTE complex. And by the way, guys, if you guys have any questions or anything like that, feel free to put them in the chat. If we have time, happy to go through it. If not, then we can certainly go through it in the Discord as well. Just don't want to lose those. So here's SPX 0 DT structure. Obviously, yesterday we had the massive, or not massive, but we had the Iron Condor structure in play. That is not the case today. More of kind of a normal structure per se. Let me get some water, sorry. So yeah, just getting into the structure. So key transition zone, that's going to be from 62.15 up to 62.20. That's our drunken sailor range. Within this range, we expect meandering of price, right? So very choppy. Yesterday we spent all day in the drunken sailor zone. So we're going to be opening towards the top of that. So the first key strike is going to be 62.50. Sorry, that's the top of the zone, 62.50. So we're going to need to see kind of a significant impulse in buying off the open to pushes above 62.50. Reason for that is this is a large strike in the structure. When we look at the gradient, or kind of how we're going up and down the hill per se, that open interest creates, we can see, 62.35 is 450 net calls open at that strike, and then we're walking up that hill to 1,500. So that's a lot more kind of speculation sitting at that strike. So it's going to take a lot more volume to overcome because of the negative charm associated with those out of the money calls that are dominating at that strike and all strikes above. So yeah, that's why we're going to need to see that intraday volume, market trend model, cumulative tick push us higher, indicating that all else equal, buyers are coming into the market. So if we're able to get above 62.50, the next kind of line in the sand is 62.75. Reason for that is there's over 4,300 net called speculators sitting at that strike. So again, another massive strike that we do need to overcome. And then above 62.75, getting into CFTMC at 62.95, 6,300 key psychological level, but really 62.50, 62.75 are the first key strikes that we need to see overcome. And then the other thing you'll note is that the put speculation, put open interest up here at these levels is basically non-existent. So we're not going to have that fear of folks closing those contracts as added fuel to pushing us higher, because there's really just not much of that up there. So again, that's where that intraday volume analysis is going to be critical. When I talk about intraday volume analysis, just so you can see, so it just doesn't look like an abstract concept to you here. So what we're doing is we're tracking SPX 0 DT call and put volume throughout the session. And so yeah, yesterday obviously choppy price action, but today when I say we're going to want to see speculation higher, we're going to want to see that ramp higher from the call side, right? Yesterday did not ramp at all, so we're going to want to see that, and then in combination with the market trend model pushing higher as well, ideally seeing some filtered tick buying that would give us more confidence to the upside. So yeah, Moise, yeah, 62.60 is a key level, but I'm not going to go through every single level here, right? 62.50 up to 62.75. Yes, 62.60 is a key level from here to there, So yeah, all that detail is in the write-up as well. So yeah, feel free to give that a read. But yeah, 62.60 is a key strike as well. Where was I? Yeah, okay, so again, we're opening up to the upside, but having our if-thens, that's the way we operate at Gamma Edge, is if-thens. By that we mean if this happens, then do that. So we have our if-thens to the upside. If-thens to the downside is first, we need to be breaking below the bottom of the drunken sailor range, which is 62.15. Below 62.15, the kind of first stop is this Gamma Glob at 6,200, 61.95. Our expectation is, given kind of the bullish backdrop, we would expect to see some kind of bounce at this level. If we are unable to bounce at this level, that would be a bit concerning on an intraday basis, and we would expect to see further downside movement. Really 51, what is that, 51.65 would kind of be the key spot to the downside. Just again, the same reasons we're talking about to the upside, those key levels to the downside. We have a 4,500 contract, put contract sitting at that strike. Almost 5,000 sitting at 6,200, so that's why we would expect, if we were to bounce, that would be the level that we would to bounce from, is that zone at 6,200 to 61.95. So yeah, I don't really have a ton else to say with this structure. Again, opening towards 62.45, 62.50 is the top of the drunken sailor range, so we want to see that first break. If not, then we could just be meandering around here with 6,200, 61.95 key to the downside. Upside again, 60.75, then maybe 6,300. You guys got any questions on that? Clear? If not, then we'll get into looking at some single stocks. If you guys want to look at something, let me know. Yeah, so here we have scripts for TradingView and Thinkorswim, those same key levels. Just so we can quickly reference those, fire through those. Yeah, Patrick, I'll get to that in a second. So looking at Apple, right, it's right at a P-Trans level at 210. So I'm gonna look at a different view. Yeah, so looking at Apple, sitting right at P-Trans at 210, so that's going to be the key level of reference for the bulls. We want to see that 210 level hold. If that does hold, then perhaps we get a bit of it holds there, push higher, room to run up to 215s where plus Gex is at. Looking at weekly time frame, like a good week last week, simply consolidation within that price action from last week. So, potentially we could see, more room to run, have earnings end of the month, so that's fine. Next, looking at Nvidia, it's ramped so high, all-time highs. Its structure hasn't caught up to it yet because it's trading well above plus Gex and COI. So we want to see those levels shift higher. Really no action here if you're not already long. Not a trade there in my opinion. Similar structure with Microsoft, at all-time highs at its plus Gex COI level. So, from a trade today, if you're not already long this name, really not much to do there. Looking at Amazon, so a lot more constructive setup just because it's not at all-time highs yet. A couple weeks of consolidation. Trading above its P-Trans level at 220. Has some respect for that in the pre-market. A lot of interaction around 220. Even yesterday, spent a lot of time around 220. So 220 holds, look for a move up to 225. Looking at Google, same thing at 0 Gex actually. So that's kind of an attractive spot to get in below P-Trans. So above, 175. Keep in mind, getting in at 0 Gex is a bit more risky than getting above P-Trans. So yeah, as long as 175 holds and the plays to 177.5, then 180. So again, the level system right there. See if that holds. Looking at Meta. Had a nice ramp in the pre-market. Again, trading at all-time highs. Yeah, I was just looking, it gets above prior day high, maybe a push to all-time highs again. Not sure. It looks kind of interesting, so keep an eye on that. I'm just marking out these ones we've looked at that look kind of interesting. What else? Looking at Tesla. It's below 0 Gex, so at a minimum needs to get above that level before that becomes interesting. You can see yesterday a lot of failures at P-Trans and 0 Gex, so that was a bit of a tell really from a bullish point of view. We want to get above 302.50. We can look at some other ones people like to look at. Palantir, I mean, this thing is mooned, all-time highs, not much to do there if you're not already long. We can look at Hood. Again, mooned, not much to do there. Gosh dang. Coin, not much to do there above P-Trans, kind of in no man's land right now. Circle, people like, I mean, early IPO, not much to do there. CRWV, CoreWeave, not a ton to do there right now, no man's land. I don't know if we have, I don't think we have win levels in the scripts. Oh, we do have win levels in the script, cool. Yeah, I mean, it's trading around P-Trans right now, 109. Let's see what the web app has to say. Yeah, so when, yeah, I mean, not a ton to say there right now. I mean, first off, just 250 overall net OI contracts, so not a ton, but, you know, not nothing either. Yeah, I mean, 110 is kind of the center of speculation right now. Well, they got a downgrade in the pre-market, so not sure how that will impact things. But yeah, I mean, frankly, not a ton of upside in the structure right now. Maybe if we get above 110, we can start to see a push to 115. But yeah, I mean, below 110, no good. So, you know, massive transition zones. Really just want to see 110 hold. Not to mention there's a ton of speculation at 80. Not sure why. So we'd want to see that the largest dominant speculative position generally is above spot price and kind of a healthy move. So want to see that. No, not interested in shorting when given the market is strong. So rather trade in line with the market than shorting something. There's no evidence of why we would short this. It's not like it's put dominated. Are people having trouble hearing me? Because I have a good microphone, so I'm not sure what the issue is. Mert, you can also turn up your volume. That generally works as well. Yeah, looking at Pepsi, trading at 135 right now. That's its key plus Gex level. So in the context of short-term speculation, this is the dominant level. Has speculation, largest speculative position is up at 140. So perhaps if 135 holds, we can get that move up to 140. But net, you know, structure looks pretty good here. Transition zone 132 to 131. So we want to see that hold. Just keep in mind from a perfect point of view, you want to be entering around the top of the transition zone. That's your best risk to reward. We've already made that move up to plus Gex at 135. So yeah, from 135, really the best we can think of is kind of 140 from there. BBA. Looking at Baba, I mean, yeah, Baba looks like crap right now. Put dominated environment, put dominated kind of structures where we are right now. We want to see this get above 112 before getting super interested. 112 because that's the top of our transition zone. Which we are clearly not there right now. However, like if you're wanting a contrarian play, like 105 is negative Gex, so if there was a level to hold, 105 is the level that does need to hold. And then yeah, Patrick, in terms of what DTE to choose, you can go whatever. You can play stock. If you want to trade options, that's up to you. A couple weeks to, you know, 30, 45 days out, no idea. That's something that you and your risk management and trade plan need to figure out. Just trying to help you here with levels. So yeah, not sure if there's any other stocks you guys have you want to run through. If not, we can opens in 4 minutes, so we'll transition over to the Discord from there, and you know, feel free to continue the conversation. Let's see if we can find some trades on an intraday basis. All of that good stuff. Yeah, we can look at Adobe. Alright, those levels aren't in the scripts, so we can just look at it the old-fashioned way. Yeah, so looking at Adobe here, transition, 382.50, so that looks pretty good. Looks like they're opening a bunch of strikes just because you can see all this zero activity there. So yeah, I mean, really the play up from 382.50 is up to 400. So we're sitting right at 384 in the pre-market, so that's good to see. So yeah, I mean, not really a ton else to say. The only, not great thing is, put dominated below spot price. Generally in a bullish market, we want to see that foundation of in the money calls dominant, not out of the money puts being dominant. So that's kind of the one black eye there. So I'd be a bit cautious, especially if we lost 380. Keep in mind the structure is not looking super good there at the time being. However, if 382.50 holds, then potentially there is a move higher. What is the price chart? I mean, yeah, Adobe too. I mean, it's in a clear as day. The weekly chart, it's in a downtrend. Daily chart in a downtrend. Hourly chart trying to form a bottom here. So yeah, I mean, just from a TA point of view, like until we get above prior week's high, it doesn't look super interesting to me. So yeah, not sure if there's any other questions. Market opens in 2 minutes. So with that, hopefully you guys got some value out of this. Let me know if there's other things you want me to cover in the future. Happy to do that, but we do these most days, so I want to make sure you guys are getting benefit out of it. So with that, appreciate the time. We will transition to the Discord now, so we'll see you there. Thanks, bye.